Hello, this is Lance with Verivest, and today I have with me David with Arrowpoint Properties. How are you doing today, David?
Thank you.
So why don't we just start a little bit? Why don't you share a little bit about yourself and how you got into the real estate business and how you guys ended up forming your firm?
Sure. So I guess I'd have to kind of give the timeline as far as how I got into it and kind of what got me here today and how Arrowpoint got here.
Mhm.
So I'd have to go back to the early 2000s when I graduated college. Around 2002, 2003, I decided that I kind of wanted to get into the real estate business, but wasn't sure exactly what I wanted to do. Um, I guess what piqued my interest was my mom's side of the family is all in real estate, and she had an uncle with 17 kids, and all of those kids were in real estate in one form or another, whether it be development, construction, real estate brokers, real estate attorneys. They're all in real estate in one fashion.
Mhm.
So one of my 17 cousins, approached me probably at a family gathering and suggested that I look to get into real estate ownership and investing. He says, why don't you start out buying like a 3-family or a 4-family or something small? And so I started thinking about it. And the more I thought about it, the more interested I got. Um, from then I went to Barnes and Nobles about every weekend and bought every real estate book I could get my hands on. I read everything. I'd sit there in the aisle and just read, how to get into it, how to be a landlord, how to buy, how to evaluate, income producing property, so on and so forth. I still have all the books that I bought somewhere in a box. So at that point, I really wanted to buy something. So not long after that, at a family wedding, I met one of the attendees by the name of Richard Goldberg, who at the time I didn't know his whole family, multi-generation of real estate ownership and brokerage and so on and so forth. Um, Not long after that wedding, I met him again. I kind of bumped into him and, we sat down and he asked me what I was doing. At the time I was in my family business, which was a restaurant business. I thought that's what I was going to kind of, be doing, go into the family restaurant business, see what happens there. But, part of me didn't really want to be doing that. So when I asked him what he did, he started getting into the real estate and, how his mother started the business and his brothers and all this commercial and residential property they own. And I got all excited and
Mhm.
I was like, well, you got to tell me more. And, he kind of took me under his wing and became kind of like my mentor. And at the time he was with one of my cousins and they weren't married, but they were, kind of had like a relationship. So there's a family connection there.
Mhm.
So anyway, so he said, why don't you come up to my office next Friday and, we'll talk and maybe I'll show you some properties. And I got all excited. I said, absolutely. That sounds great. And so the next Friday I woke up to a blizzard. Here in New England, it's not very uncommon.
Yeah.
So I said, you know what, screw it. I don't care. I got my car and I drove over there anyway. And he couldn't believe it. And he's like, you must be the most motivated person I've ever met. And to this day, he still tells the story.
Mhm.
So he got into his pickup truck and drove around and showed me, this property and that property and telling me stories. And I got so into it and so excited. I said, man, I got to buy something.
Mhm.
So he kind of coached me along. And not long after that, I ended up buying a 4-family. And this was right around 2004. And that was my first purchase. And I bought the 4-family. I turned it into a 5-unit. I took one of the units and I basically kind of made like an in-law apartment out of it type of
Mhm.
thing. So that was my first purchase in real estate. I owned that for probably the next 5 years, and I was still doing the family restaurant thing because I still wasn't sure, owning one little property is really not enough to support you. So I'd say around 2009 is when I got out of the family business 100%. I ended up buying a 12-unit brick building right here in Lawrence near my hometown. And from then on, I started doing, real estate syndications and I got more into, the private equity and started out more friends and family, type money, go to the people, And then around 2012, Richard Goldberg's son, who's my age, moved back from Chicago. He's now my partner. He's been my partner for the last 8 years or so. And we decided, well, let's go in on some deals together. So we ended up doing our first deal in 2012. And since then, we've done a number of deals. We've closed on a number of multifamily properties. We've done a number of syndications with friends and family money. That's expanded a little bit. We've done some institutional money as well. We've exited a lot of those deals at the same time. I'd say we've sold probably about 260 units out of the portfolio, but we're still in the small size compared to other groups. Sure. And where we are today, I'd consider ourselves as conservative buyers. We definitely are not in the market of overpaying for something. We're looking for great deals where the numbers are going to work, where our investors are going to be extremely excited to get in on the deal. Yeah. So we could look at a number of deals, and we'll pass on a lot of them. Yeah. So right now, especially in this market, it's tough finding good deals. The market's pretty crazy, as you know. It's definitely a seller's market, but there's still value add deals to be had if you look hard and you make the right connections. So that's pretty much where we are today. We're still kind of plugging along. Strictly multifamily. Do a lot of renovations, a lot of construction. And it's still looking for deals. And right now, with the whole COVID situation, kind of threw a monkey wrench into the whole plan. But in the Northeast, real estate value is still very strong. I mean, you could say people took a hit, and they're still taking a hit, but real estate values are still fundamentally strong. The financing is still strong. So we're still out there looking for deals.
Yeah. So where do you typically, what is your process for sort of, how do you source your deal flow, or what is that? What are the different strategies or tactics you use to?
Sure. Well, I don't want to divulge all my trade secrets, but
yeah.
So early on, a lot of the deals, in fact, pretty much the only deals we did were off market, and we would just kind of old school, just make connections with the owners and stay on top of them and follow up with them, and eventually get them to make a deal with us. And we did that on a lot of the deals, and we were able to get great pricing on a lot of them because they never hit the open market. And what made it easy was we targeted smaller deals, obviously, in the beginning, and we'll still look at smaller deals if the numbers make sense. But we target smaller deals that are owned by, sort of the mom and pop type owner that's owned it for a long time, doesn't really want to market it, doesn't want to go through the process, probably doesn't want to pay a commission. So they're more likely to deal with us. Right. And in turn, we've been able to get great deals that way. And we really haven't bought much on market. So as far as our deal sourcing, off market, brokers will call us sometimes with an inside deal. We have great relationships with the big, brokers in our area, and they'll call us up and say, "Hey guys, I got this deal over here. I think you'd be interested," and we'll strike a deal. So I'd say that's pretty much our main method or way of sourcing deals.
So with the markets in particular, then is it? You said, Northeast, New England, but is that mainly in around Boston?
Yeah, I don't want to say all of New England. I mean, all of our stuff has been what they call North Shore, so north of Boston, and then mainly in the Merrimack Valley, which is along the Merrimack River, encompasses a multitude of towns and cities, and that's basically along the New Hampshire border. Okay. So we've had some stuff in southern New Hampshire, northern Massachusetts, North Shore, nothing in urban Boston or South Shore. So we're really focused on, the Merrimack Valley and the North Shore.
Got it. So in terms of that, what are the sort of key demographics, or what's, up there? What do you see? What's the economic base, and, what is it that other than you guys live there, right. But it's, what are sort of the key points to that particular market?
Sure. So we're very focused on, workforce housing. I'd say just about all of our tenant base is workforce, middle income. Um, as far as the towns, I mean, we like to stay within, 30 minutes or so, 30 miles, 30 minutes is what I say, of our corporate headquarters. We're not going to travel too far to a property because, we're very hands-on. We like to have boots on the ground and we're at our properties all the time. So, our market is basically like I said, 30 minutes, 30 miles within our office here. As far as demographics, like I said, working class people, good school systems, that's pretty much it.
Yeah, that makes sense. I mean, for you guys, you've been in the game a long time. So do you have sort of an overarching investment philosophy? I mean, something that you kind of, your guiding light as to how you look at things, or, how do you determine whether or not you're going to, a deal's worth doing or not?
Yeah. If it's not going to work for our investors, it's not going to work for us. That's the way we approach a deal first. Are the numbers going to be attractive where our investors are going to want to get in on this deal? We're not into making deals that are only going to benefit us. We're not fee driven. I know a lot of groups out there are. They'll look at a deal first where we can feed the heck out of this and make some money, but maybe the economics aren't great or the long term play isn't great. So it's got to have not only the long term, but it's got to have the short term play as well. So it's got to make money right off the bat, and it's got to be a solid return producing for the investor. And if it works for our investor base, then it'll work for us.
Yeah. So, I mean, post acquisition, then, it's you guys are doing value add plays, I'm assuming, right? So you're sort of putting some money into them and repositioning the assets. So, what are the kind of the key things that you guys are doing and looking to do to an asset, post acquisition? How do you guys, add that value and, or maybe even, mitigate the risks that kind of come along with that?
Sure. Well, I mean, there's a couple components in there. I mean, obviously, renovations is a big play. We do a lot of construction. Some properties we'll look at just need sort of some light cosmetic type renovations, but then other ones we've gone in and gutted units to the studs and done all new electrical and plumbing and insulation and the whole nine. So, we look for properties that, could use that facelift, that cosmetic facelift. We don't get too much into the heavy renovation stuff, although we will if the numbers really make sense. It's a big undertaking. We're looking to more get in there and improve the curb appeal, improve common areas, improve amenity space, go into the units and maybe change out countertops or, put some nice backsplashes in or, change out carpets for some nice, vinyl plank flooring, things like that, simple type stuff, but it's a big return for the buck. So that's one component as far as the physical. The financial component is, obviously, we look for rents to be below market. So, typically the deals we're buying, like I said, the mom and pops are great because they typically haven't raised their rents in a long time. They're more interested in, if I have a full building, I'm happy. I don't care what the rents are. I don't want vacancy, but the rents could be significantly below market. So we go in and we could raise rents by doing nothing. But then when we do that renovation, then we're getting a huge pop. I mean, we've gone in some units, we've been able to raise rent with a renovation, by $500 or more, which, is very significant. Also, in the same token, their expenses are probably high. They're not watching, their utilities, their water bill, electric bill, things like that. So we'll go in and we'll look at those areas and we'll do a whole green energy upgrade. We do that on pretty much every property we buy. We'll go in and we'll have, usually it's called mass save. They send an engineer in and they identify areas that you can improve efficiency wise, and they give you a whole bunch of money and to do it, and you basically don't hardly spend anything. And we'll get, new insulation, LED lighting, low flow aerators, and that just, saves on the utility costs right off the bat. And it's very minimal, spending on our part. So, those are different areas that we look at, and, pretty much that's what we've done on every single deal. And if those, areas aren't there, and we don't see that as, a fit for us, then the deal is probably not going to work. So again, we're not looking at deals that, have no value to be created where, they've maybe already done all the renovations. You see a lot of these deals where they've gone in, they've owned the property for say 4 or 5 years, renovated, maybe half the units or 2/3, and they try to leave some meat on the bone.
Yep.
And a lot of times it's still not enough. So, we're more into, like I said, the older long-term ownership, we find is the true value add play.
Yeah, that makes a lot of sense. I mean, like you said, those particular owners are, they're afraid of, they move rents, their vacancy, and they
Right.
It's they don't want to be dealing with that. So it sounds like you guys, then you do your own property management.
We do, and that's, I think, something that separates us a little bit. I always say we're a property management company first. That's really our forte.
Yeah.
Like when I started out 16, 17 years ago, I did all my own management. I didn't start out buying big apartment complexes. Mm-hmm. So I had to learn everything. I learned all the accounting. I did all the leasing. I did my own maintenance. I'd be in there painting apartments on weekends. I think that really went a long way for me because it allowed me to understand all facets of the business. Mm-hmm. So if, not that I would, but if we farmed it out to a third-party management company, I would understand how all that stuff works because I've done it all myself.
Yeah.
So when I say we're a property management company first, I mean, that's like I said, that's probably our strength. We got into the syndications and the private equity later on. And we started out like very small, like I said, and sort of grew from there, one deal at a time. But having said that, we wouldn't do property management for other people. We strictly manage our own stuff. So we're focused on that.
Yeah, I mean, it makes a lot of sense. I mean, it's just that, there's a misalignment of interests. It's like if you own the place, how you look at it and assess it, and
Right.
having some sub go out there and do something. I mean, you've done it yourself, what it should cost, what it takes.
Yep.
That's a way to create value for the investors.
Yeah. So like I said, I think that does separate us a little bit. And there's a lot of big companies around here, a lot of big real estate companies that they own a lot, but they also do third-party management, probably because they figure we're already doing the management. We already have staffing. Might as well collect some fees on it. But I just find that as a conflict of interest because you're never gonna, take care of the properties as well. Unless they're your own.
That's right. Yeah. Who's going to get the attention.
Yeah. I wouldn't feel comfortable if I was an owner farming it out to one of these, bigger companies that have a whole bunch of real estate that they own. And I don't see that working.
Yeah, that makes sense. So, I mean, other than yourself, and it sounds like, so your partner, Jay, and who are the other kind of key players on the team that,
So it's primarily Jay and I. I mean, we pretty much source deals. We, we'll look at acquisitions. I have a maintenance sort of supervisor that oversees all our construction projects and deals with all the renovations that we have going on, which at times we have multiple renovations going on at different properties. And, the advantage of having all our properties close together is, you can bounce around from one property to another, all within, 10, 15 minutes, because they're just, some we have across the street from each other. Mm-hmm. So he oversees a lot of that. And then I have another person in the office that kind of oversees all of the management and also helps on acquisitions, helps on, sourcing deals, and then helping on the due diligence and acquisition side.
Cool. That's great. Well, I appreciate hearing the story and getting to learn more about you and your team. And thanks so much. And have a great day.
Yeah, thank you.